So let's wrap up with the last slide in focus. This is a correlation between,
cable and US bond yields. Now, what I'm not proposed to understand exactly what's going on here, but I thought I'd flag it. So the question is, will cable with the British pound strengthen on a US rate rise if there is one tonight, or is an implication of one? Textbook economic theory tells us that interest rate differentials are a key factor in setting FX rates. Yep. But the orthodoxy is that the currency with a higher interest rate should strengthen against a currency with a lower interest rates. So in this instance, the expectation of US rates rising ahead of sterling rates.
Stronger dollar, weaker Great British pound.
That's what you'd expect. However, cable seems to be bucking this trend. And cable has had a positive correlation with US 10-year bond yields since late last summer, and that's the area here I've highlighted in the dotted box. Because bond yields have risen, implying higher US interest rates in the US, so cable has strengthened. And the question is, will this continue? I think you can see it quite clearly. You know,
but again, that's not what we were taught in the schools, were we?
No, and I must say, on the face of it, I haven't been able to come up with a plausible explanation as to why a US rate rise should be good for sterling. Perhaps the thinking is that once the Fed moves, the Bank of England will feel, assured that it can pull the trigger, and maybe even move a bit more quickly than the Fed. But that's a guess. But anyway, perhaps the orthodox theory ought to go out the window tonight, and maybe we will see cable rally if the Americans do indeed raise interest rates.